we are following a developing story on Pfizer, the company's CEO unloading a huge chunk of stock on Monday, the same day they announced major news on a COVID vaccine. Let's get to Meg Terrell, who's got the details. Meg.
Hi, Melissa. Well, regulatory filings showed that Albert Bourla, the CEO of Pfizer, sold about $5.6 million worth of Pfizer stock on Monday. Of course, that was the day that they reported results of 90% efficacy in their COVID-19 vaccine. Their stock jumped, closing the day up almost 8%. Now, the details are that he sold 132,500 shares at an average price of about $41.94 each. Now, this was under a 10b5-1 trading plan, one of these pre-planned sales trading plans that he adopted in August of 2020. Now, Pfizer points out that Bourla still owns $15 million in Pfizer shares, saying that over the 25 years he's had with the company, he's accumulated a substantial amount of Pfizer stock. Quote, under our qualified and non-qualified savings plans, he says he now holds approximately 9 times his salary in Pfizer stock after the sale this week. That's how you get to that $15 million number. Now, that's thought to be triggered, this sale, by the stock hitting a certain price, guys. And there's a debate over whether these things are appropriate. They are legal under these 10b5-1 plans, and they're not based on any insider information of what's happening with data or anything like that. But you're starting to see a debate over these things because you've seen it from other companies too. Brian Scorney, a biotech analyst at Baird, tweeting out today, "This is capitalism at its best," saying less than a year from the discovery of the virus to a highly effective vaccine, Albert should be rewarded. The benefits to society will be incalculable. But of course, we've been having this debate since this pandemic began, and SEC Chairman Jay Clayton joined Squawk back in May and said it's essentially an idea of corporate hygiene, that executives should be careful about even giving the perception that they might be doing something inappropriate. And so, guys, the debate continues. Mel?
Certainly does. Meg, thank you. Meg Terrell. Karen, when I first saw the story, I texted you. Because I thought as a corporate governance sort of watcher, you'd have the best thoughts on this. And what's your takeaway from this?
Well, I have such goodwill toward the guy. I want to have the sort of most innocuous spin possible. And I think the 10b5 was in place. Look, remember, the stock was only up 15%. It's not like it was trading at 20. They came out with this drug and it went to 100, right? So I sort of think maybe could they've handled it a little bit better? Probably yes. But I also, he's a great trader. He's like, buy the pandemic and sell the great day for humanity. So good for him. Yeah. I'm not so troubled by it. Maybe it would have been better one day later if he'd done it.
Yeah. Tim, you're a bit skeptical.
Well, one of those analyst comments that Meg reported almost made it sound like, well, he's done so much for mankind. Who cares? I mean, look, I have no particular insight into whether this was manipulated or not. You can have a 10b5 in place. You can also control when you release information. Again, we'll find out. Let others do their job. I will say he was particularly laudatory and almost hyperbolic, I thought, when talking about this accomplishment. It is massive. Is it the most important medical achievement in the last 100 years? I don't know. I'm sure a lot of people could say that. But he was very vocal about the importance of the moment at a time when he was, incented to see the stock go higher.
Yeah, clearly we've got a lot of questions. So let's bring in a former SEC branch chief, Lisa Braganza, joins us. Lisa, great to have you with us. Thanks for your time. And it seems like every company's defense, or I don't want to say defense because that implies that there's some sort of guilt involved, but their response is that there was a 10b5-1 plan in place. And yet still you think that there could be questions that the SEC asks. What would those questions be?
Right. Now, the SEC can look at that 10b5-1 plan and say, all right, that's good evidence that the plan was in place and that the officer did not trade on the inside information that he had that day. But that doesn't tell you anything about whether the plan was based on inside information. So we have to go back to August 19th when this plan was put in place. So the SEC staff could easily look at whether that plan was established based on information that Dr. Bourla had at that time. We also don't know, based on the information that's out right now, whether that plan was changed over time. That's another factor. It might have been altered at some point, and maybe that was altered. The SEC could investigate whether that was altered based on inside information. These are the types of charges the SEC's brought in the past. The fact that somebody has a 10b5-1 plan does not insulate them from SEC charges. We can look back at Countrywide. Angelo Mozillo, amongst the many fraud charges brought against him was insider trading. He had several 10b5-1 plans set up, and he was charged with illegal insider trading based on information that he had at the time he set up those plans. Ken Lay, we remember from Enron days. Ken Lay was charged, among all of his fraud charges, was a charge of insider trading based on the plans that he amended. So in his case, he changed those plans based on information that he learned. So plans are helpful, but they're not a silver bullet.
Hey, it's Karen. Thanks for being on today. When I looked at the Form 4 today, it said something about the sale subject to a plan that was put in place August 19th, as you cited. If that plan was revised, wouldn't they have had to say so in that Form 4 filing?
I'm not sure
Not
that they
what the
would
revision
have.
was, but that it was revised.
Right. I don't believe, because they don't have to release what that plan is. They just have to, when the sale is made, they put something in the Form 4 saying it was made pursuant to that plan. So we don't know what the actual plan was. As far as I know, it has not been released.
Lisa, thanks for answering so many questions that we have. Lisa Braganza Law, former SEC branch chief. Guy Adami, we definitely we want to believe the best in Pfizer, clearly, because of the strides they made in finding a vaccine. And yet this is still a question, regardless of what the company is, what they've done, who the CEO is. There's still questions.
The optics are awful. I mean, I don't think any of us are suggesting they did anything wrong legally, but the optics around this are miserable, and you have to use that word. Pfizer, Tim made a good point. They basically came out that day, I'm paraphrasing, the biggest breakthrough in the last century in terms of medicine. Maybe that's true. Sounds like it's true. That's great. And then on the back end, you sell, I think, almost 60% of your shares at a price the stock hasn't seen since January. And, by the way, and I know that a lot of people poured into Pfizer. Now, a week from now, Pfizer could be trading $50, and this will long be forgotten, or it could be languishing around $38, and we'll still be talking about it. Somebody, in my opinion, in public relations or something at Pfizer had to get together and say, hey, we're going to put a moratorium on anything relating to stock purchases or sales in the immediate future based on this information. It's just too much of a magnifying glass. That's what I would have done. Now, whether that's right or wrong, that it's again, we can have the conversation. And I understand capitalism and all that stuff, but optics absolutely have to play into this, Mel.
Dan, does this matter to you? Should this matter to investors?
No, but it may matter to him. I think Guy makes a good point. He could have sold stock at 42 and it could have been trading at 52 days later. I mean, that's what makes a market here. Maybe his kids needed some braces and one of them was going off to college or something like that, doing a little financial planning. I mean, we just don't know. The one thing I will tell you, though, in the next couple of months is that, there's a lot of skepticism about the timing of their announcement about the vaccine data. They were very, very clear that they did not want to release any data, good or bad, before the election and alter it. But you may see Republicans come after this because the optics look so bad. You may see Republicans come after him, let's say, in the new year, one way or another. So these guys are going to have a PR little nightmare on their hands. I don't really think it's going to affect the stock price, though.
There's probably a reason why somebody in PR didn't tap the shoulder of the CEO, and that's because the someone in PR actually sold as well on Monday under a 10b5-1 plan. Sally Sussman, $1.8 million in stock. This is thanks to Meg Terrell, who just emailed that to me. So Karen, I'll go to you for the last word here. Do you still have questions? Do you think that it is worth the SEC's time to look into this?
I mean, I don't know how busy they are, so I can't say to that. But think about it. If he has $20 million worth of stock and he sold 5.6 million, we're focusing on the 5.6 million. Let's focus on the 43,000 and change number of shares that were up $5, $6. So for $250,000, so that's a lot of money to you and me, but maybe to him, not really. That was the differential in the stock. So I think this will blow over.
Yeah. Dan, you didn't care what your cat did. He made an appearance in the background.
Shepard Smith here. Thanks for watching CNBC on YouTube.